was designed a month ago, this topic, and in 1 month, you are already behind the times in terms of numbers. It is 4.9 crore, or almost 5 crore to 40 crore. So that's the pace at which it's growing. So absolutely the right topic to discuss, since it is, the numbers are looking old even within a month of designing the topic. Likewise, AUM growth, I don't want to repeat the numbers. We now know them. They're the best numbers in town to cheer. 21% CAGR for the past 10 years. So that's some consistency of growth for the mutual fund industry. Again, unique investors, that was a number I told you about, 5 crore now. And it's growing at the pace of 10 lakh a month. And therefore, some 90 lakhs at least in the past 12 months. That's the numbers I have from one of the industry associations. Thank you. So the performance is very great so far if you look at the AUM and if you look at the number of unique investors. But let's put it in context of where it can grow. 5 crore unique investors in mutual funds. What is the total number of bank deposits? 300 crore. Okay, now that's overstating because it obviously got overstated by Jan Dhan. And it is, a 100-year-old industry. So it would be overtaking. Let's look at another number which perhaps is more comparable. Total number of tax filed, unique tax accounts in India is 8 crore. So that perhaps is one milestone which the industry could reach very easily. But even if there are 8 crore tax filers, the number of people who pay income tax is only 3 crore. The difference being that you have to file the tax if you have 3.5 lakh income, but you pay a tax only if you have 7 lakh income per annum because you have all the rebates and deductions. That also explains whether the industry will hit a roof very soon. If total number of tax payment is only by 3 crore people, then have you already enrolled all of them as mutual fund investors? In that case, where do you go from here? Is 8 crore a hard ceiling? Those are some hard questions that the industry will have to discuss and which I'm hoping to pose over here. The other question which Anilji raised with Navneet in a very strong fashion in terms of geographic dispersion. Navneet gave some excellent numbers in terms of how the B30 is growing. I only looked at the top 15, T15 industries. That's the contribution to AUM has grown very well from about 25% of the kitty to 35% of the kitty. But there the red flag is it has remained at 35% for the past 2-3 years. So again, are we reaching a roof? That is the question I really want to pose to our experts today. So let me start with you, Mr. Singh. What is your recipe for going first beyond this T15? If the AUM contribution from the top, top 15, outside, beyond the top 15, is kind of hitting a ceiling at 35%. Has the industry now to get semi-urban, rural?
Basically, when we are talking about T15 and T30 or whatever we talk about, the basic benchmark has to be what is the savings of the India is lying. So we have to benchmark to the bank deposits. If we are having 35%, how much are the bank deposits in these towns? Rather than looking at standalone what is happening in mutual fund industry and looking at the bench number, because ultimately the investments in mutual funds are coming out of the savings. It could be of corporate, it could be of the individuals. So we have to see. The healthiest sign is that the percentage in T30 is growing. That is one part. But we'll have to look at the number, how much deposits, bank deposits and small savings are there from these towns and how we have to catch up with that percentage. Because my gut feel is that even in case of bank deposits, it will be skewed towards more T15, T30 because these markets are the aggregated markets. So what is happening in Bombay is not Bombay alone.
Just give you a small data on bank deposits. It is also an extremely skewed distribution. I'm not at all abreast with the numbers in terms of T15 and beyond the top 15. But I'm definitely, I can tell you about state-wise distribution. West Bengal is a huge depositor. And the West is a huge consumer of loans, if you look at the geographic distribution. So West Bengal for y'all is only the 5th largest in terms of AUM. So do you think that East has been ignored more generally? Is that a way to grow?
Yeah, see, if you look at the history of West Bengal, if you look at the chit funds, if you look at all the scams which happened, they are basically savings kind of culture which is there. People do that. But now it has moved ever since this scams have come down. These chit funds have come down drastically, and all that money has been gotten by the mutual funds. And today, if I talk about my mutual fund, we are having the largest the penetration in West Bengal and Eastern zone to be together. So this is a cultural shift also, which is happening. People who are having, they were risk-taking people. They were already taking risk in the chit funds and this thing where it was not very guaranteed kind of products, but still they were putting it. They have moved to more
Bank
regulated
deposits.
products. It's not moving, the money is not moving from bank deposit to this rather than moving from chit funds, etc. So that is a different story. But if you look at, Mumbai, whatever money is coming, most of the money is aggregated money. If all the banks are putting money in mutual funds, that doesn't mean that that's Maharashtra or
So
Mumbai.
let me rephrase the question then and then move away from the state's question. See, the largest amount of contribution has always been coming from Maharashtra. That's about 20%. Gujarat is 21%. And Karnataka 20%. You think these are fully squeezed out?
So that's what I'm saying. When we are talking about Maharashtra, Maharashtra includes Mumbai. If you take Mumbai out of Maharashtra, the things will be totally different. You take Bangalore out of Karnataka, things will be totally different. Gujarat is again like Bengal. People are ready to take more risk. They are putting more money into mutual funds. So that's a different story. Bengal and Gujarat can be bracketed, but Karnataka and Maharashtra can be bracketed in the other. So we have to look at the numbers differently.
Okay. Just to toss that question to you, do you think geographically you all are well spread?
So again, Latha, when we look at past, yeah, we have been spread across India. But please put that in context that 13 districts of India gives half of India's GDP. Balance 692 districts put together gives rest of the half. Now my distribution cannot be very different from that 13 equal to 692 equation. The second thing, and this is a very simplistic explanation, the tax compliance in urban India is far, far superior to, let's say, semi-urban and rural India. Partly because of agriculture income, partly because of rule of law.
Informal cash income.
Informal. So again, by definition, I'll be biased towards urban India compared to semi-urban and rural India. Keeping those things in mind, I think we have done a decent job. But have we saturated? Answer is clearly no. There are now about 30 crore Indians who own a vehicle, maybe two-wheeler majority. Potentially they are all my customers. The amount of money lying in gold, it could be anywhere between $1.5 trillion to $3 trillion. Potentially that saver is also my customer. So undoubtedly we still have a long way to go in terms of depth as well as width.
To come back to this tax filing question, clearly, if it is 8 crore tax filers, it is 8 into 4 in terms of the family. So it's 30 crore. What would you say, or if you take number of people who pay tax, that is 3 crore, I'm only looking at direct income tax. GST, of course, will be paid by everybody. If you take that, then it is 12 crore. Do you feel that that could be the saturation point? Do you worry about that?
Latha, you don't know about people whom I know in my community. They all have much bigger car than me, much bigger house than me. They have taken much bigger vacation
And don't have
than
a tax
me.
file.
And in their lifetime, they have not paid as much tax as I pay in 1 year. When I go to my CS office, everyone claps Navneet bhai. Bola, ye dekho, ye aa gaya. So 3 crore is a myth.
And you need a PAN card no, to file that, to get into mutual funds. Part of the KYC is the PAN card. So will that be a resistance? I'm just saying that when I look at the number of tax filers and when I look at the mutual fund industry, my simple question is, will you reach a roof if you get to 8 crore?
So one, tax compliance will keep on improving. as GST becomes more and more pervasive, it's going to result into higher and higher income tax collection. So my feeling is that as long as we focus on width and depth, as long as I can go and convince people that keeping cash in home without paying tax is actually injurious to your financial health, and you should put that money after payment of tax in mutual fund and you still have a chance to get better return. That mindset change will ensure that number of taxpayers or number of return filers will not necessarily be the constraint.
I'll, time permitting, come back to possible constraints in terms of the spread of the number of unique investors. But let me pose that question to you, Swarup. I once again come to the same point, that the formal economy, is that a roof for the mutual fund industry? I define the formal economy as the number of direct taxpayers and the number of direct tax filers.
I think if you look at the past data, you can infer certain things which we are currently discussing. But I think 2024 is a very interesting year, and what can happen post 2024, my personal opinion, may not have any bearing on the past, because two things are happening. The demography is unfolding, both in the form of new investors, and if Soumya will permit me, then the existing investor money is now being handled by the second generation. And that changes everything for us. There is a distinct shift from fixed assets to financial assets, and hence, probably 2024 is that Spotify moment for our industry where suddenly we'll break away. What used to be 2.3 crore folios of 20 years of hard work by Nilesh Bhai and Navneet Bhai, today adds 90 lakh folios in 1 year. That's how it's changing. So my personal opinion is, if we get caught in the past, we will miss that future which is coming. Yes, when they start, I agree with some of the data Nilesh Bhai puts up. We take when we started as investors, we were also market timers, right? थोड़ा Dream 11 जाएंगे, थोड़ा crypto करेंगे, घूम फिर के इधर आएंगे. Because finally, what is the mutual fund? Mutual fund is that only instrument which rightfully, and I repeat, rightfully shifts the risk of investment back to the investor. Hence, this is the right investment vehicle for every possible investor, because we are a pass-through. We can give everything from our platform. That's beginning to unfold. So my personal opinion is, from here on, we will probably start adding 2-3 crore folios per year as we speak. And our market is PAN card. And as PAN card penetration starts moving, and Lalit is one of the biggest examples of how there is no India Bharat when it comes to the phone, the data that will unfold may not have any correlation with 25 years of Amphi working till now, is my submission.
Okay. Lalit, you have to take it from there. You have been able to show a magical growth in a very short time, which is basically what even Zerodha showed, the power of digital. What is your sense? Is it spreading fast enough, or is digital literacy likely to, throw some hurdles?
Yeah, so see, first of all, one thing we all agree, I think, at least in this room, we talk about it a lot outside this room, that, mutual fund is the best product for a retail investor, right? I mean, the most beautiful product you can diverse, with 250 rupees SIP, it's very, it's very real right in front of us. And a lot of actually mutual funds offer even 100 rupees SIP and so on. And geography is no longer a barrier with internet. PAN card is barrier in terms of, operation, because we take PAN card for, but apart from that, there is no barrier from income perspective, like Nilesh Bhai also mentioned. And I mean, look at number of flyers, number of people who fly, or an amount of deposits in the account, and look at the penetration, right? I mean, if you look at just women, for example, what is the penetration in women investors? We are talking about AUM across Bombay and Bangalore and so on, but AUM also builds over time. So now, if you're opening accounts now, they will kind of, build wealth over next 10, 20 years, and then people will watch them, and then they will start and so on. Education, you said, right now, slowly, again, internet is playing a big role. In bigger cities, there are distributors, and even in mid-tier cities, there are a lot of distributors who are talking about mutual funds and so on. And I think what I feel is that we just need to remove constraints, so constraints also in about our thinking, I think we talk too much about tax filers and so on. I think it's kind of maybe not, I don't think it would be a big bottleneck for us in the future.
The number of taxpayers will not be a bottleneck. It will be, but our hope
No,
is
I
that
mean,
the number of taxpayers
it's
will
independent.
grow.
Like yeah, of course that will also growing, but it's independent. Like why should we worry about that?
Okay, no, I would only to know, how far can this growth, continue? What is your sense? This magical rate of growth, if you look at the AUM, that's of course because of the growth in share prices itself, market cap, GDP of the economy. That's a different measure of growth. Another measure of growth would be number of investors, and fortunately or unfortunately, you have given me that topic, that it is number of unique investors you want to grow. Will that pace be replicated, the pace that we saw from 20 to 24?
I just need a Xerox machine.
Okay.
A Xerox machine which can replicate Lalit into 10x.
Okay.
ये अकेला बंदा now contributes 10% of mutual fund SIP and 25% of new SIP investors. बस मुझे एक Xerox machine चाहिए जिसमें मैं ललित जैसे 10 लोगों को निकाल दूँ. Then my job is done.
Okay. Okay, to make it a little more granular in terms of the effort needed, let me get to Swarup on this. Swarup, the bank deposits also grew very well when it is going from metro to tier 2 to tier 3 cities. But thereafter, it becomes a little difficult because your area is high, and as Nilesh pointed out, 692 districts give you half of the GDP, whereas top 13, you said, gives you one half of the GDP. So as you penetrate further into geographical areas, bang for the buck is much, much less, which is why banks also couldn't pierce beyond a point. Do you think you will face that problem? It will be more serious for mutual fund because you have to explain a product which has about 400 varieties. Beyond the top 13 districts, you have to invest in, feet on the ground. Do you think it will become a challenge?
No, Latha, I firmly believe this is a business of advice. So in the 17 countries we work in, this is the only country where mutual fund has branch offices. In all other countries, this job is done by the distribution community. And that we will see unfolding very quickly and rapidly, either through Lalit's mode or through the gentleman who asked about direct versus the. Incidentally, when direct plan came, the AUM of individual mutual fund distributors was 17%. Today it is 25%.
Oh, really?
Yeah. So let's look at data. And when you look at that unfolding, what will unfold, again, I repeat the same statement, may not have any correlation. Now, when I was interviewed 13 years ago in Mirae Asset, I was asked how long will it take for a product to be told to the entire length and breadth of the country. And I thought that was a question out of the syllabus. So I flipped it back to my boss. How long does it take in Korea? He said, half an hour, 40 minutes. I said, how? He said, everybody has a phone. And that's where everything changes. Everything will come here. While I do understand and appreciate the fact that the Indians might transact digitally, they will probably take advice physically. But that physical advice need not be a person-to-person sitting across. Right? They can advise through their own modes. There are enough nudges available online and psychological nudges which can move them up. Now, you don't need so many investors educated to come and reveal.
I'm
right?
not very convinced of that argument.
Fair
I'll
enough.
tell you why.
Yeah.
When Shyam Srinivasan's exit interview, I asked him, okay, do you think the spread of branches will plateau? He said, no, this year I opened 35 branches.
No, I was coming halfway.
Because people are parting with their cash. They want to catch hold of one guy in case they're not happy with something.
No, but Latha, that is what is the beauty of this panel. You have the largest penetration sitting on my left.
The question is going to him.
Yeah, the largest aspirational physical penetration coming here. The largest digital penetration for a guy like me will just ride this. If I aspire to do what SBI does, they will thrash me at this game. Right? The only people viable to pick them up is probably Kotak. But I'm not, so the point I'm making is horses for courses. And each one will thrive in its own way. We can't ape each other is my simple point. What will work for SBI will necessarily not work for Mirae Asset. But each one will grow because the landscape is so large and the pie is just getting started.
Okay. Same question to you, Mr. Singh. You all would have penetrated more than others. I mean, it's obvious, it's SBI. But is there a problem that yours is a more complex product? And after a point, a person parts with his cash only when he has a physical board. मैं इसको पकड़ूं, मेरा अगर कुछ, say the check didn't come or the check was late or even the deposits came in late electronically. Would you think that physical presence will become a necessity to spread?
I don't think it's 100% yes or 100% no, but yes, it has to be more than what it is today. But it cannot be like the banks, because banks have a different business
It's a
model.
plain vanilla product. Even then they had a problem piercing.
But no, I'm coming to that point. Actually, when you said that our products are complex product, there are 400 products. Actually, if we are going to beyond the smaller towns, actually this is the responsibility of the industry, that we push and distribute only very simple products, very simple products. Don't push the complicated products. That things will evolve over the period of time. At this point of time, it's not necessary that we sell PMSs and AIFs or small caps of the sort in those towns. It should be a very conscious effort at the time by the manufacturers to push simple products, so that the need of more and more brick and mortar and the people who are coming. Yes, we have a natural advantage when people, as you said, when who's door to knock if case of any problem, so SBI comes handy, because people look SBI and SBI Mutual Fund or HDFC or HDFC Mutual Fund in the same way. That's a natural advantage, but slowly people are understanding, people are moving. But coming back to the topic which we are talking about, this will definitely require a Jan Nivesh movement from as it happened in banking. Today, as far as number of accounts are concerned, 2/3 of bank accounts are Jan Dhan accounts. So if we want to do 40 crores, we have to have Jan Nivesh. We have to have that movement with the help of digital assets. And without having brick and mortar issues, I think we can do that. Coming back to that, but yes, it makes a difference.
Okay. To you, that question is even more pertinent. You have been able to engender almost a digital revolution for getting people into mutual funds. But beyond the point, will this mean physical presence? Lalit.
So first thing, I mean, really appreciate what Singh sir said about the Jan Dhan kind of similar kind of moment. I think we need one moment, of course. But coming to this
So
digital,
you mean a government-sponsored,
I don't know. I mean,
mission mode.
There are wiser
spread.
folks who can think about how to do this. But I mean, it's a great idea. On this digital versus physical, see, I used to work with Flipkart, India's largest e-commerce company, and when we were kind of working there, a lot of questions were asked, कि मोबाइल फ़ोन तो 30,000 का है, 40,000 का है, क्यों कैसे ऑनलाइन कैसे लेगा, पहले देखेगा वो, या फिर even large appliances, how will somebody buy, or furniture, or especially in fashion, कि t-shirt तो देखना पड़ेगी, size कैसा होगा, and so on, but it changed. And now, and by the way, that doesn't mean that physical commerce did not grow, right? There is a customer who love online. They would buy, and they will be in tier 2, tier 4 cities, tier 3, whatever, right? There will be customer who would want to meet somebody and buy, and so on. And there will be third category, which might be something else we don't know yet, like, Jan Dhan kind of customer or whatever, right? But I think everybody will have to put effort, and everything will grow. But I don't think that online will
physical presence will be a necessity beyond the point.
Yeah, so I think they're independent is what I'm trying to say. There would be a customer, my parents' generation, my parents never invested in mutual funds, and I don't think Groww can kind of serve them right now. Especially my parents who are in a village right now, they would need to talk to somebody and so on. But there is a 24-year-old or a 35-year-old, a person working in Flipkart, they won't prefer talking to somebody. They won't prefer talking on phone also. They would want to open the app and invest and so on, right? So different category, different kind of channel.
I take your point entirely. There are all categories, and given our demographic advantage, in every category there are enough people to be served. Okay, Nilesh, what about the experience of those who have entered? A bulk of them have entered at 2020. As we know, from about 1.5 crore, we have gone to 5 crore in a matter of 4 years. Those people, as Navneet and Anil's conversation also brought out, have not seen a serious downside, especially in small cap indexes. Now, while the India growth story cannot be challenged, the manner in which we have seen specific sectors of the economy grow or specific sectors of market grow, there is a possibility that you will see a 1-year downswing. do you think the industry will be able to overcome? If you suddenly see that you're not as rich as you were 1 year ago.
So undoubtedly, Latha, that is the biggest concern. We are not in the business of managing money, we are in the business of managing trust. And while all of us have made an attempt to educate investors that please come on a long-term basis, please don't expect miracle like what happened, in last 3-4 years. I don't know how much it would have been absorbed by them. And ultimately, proof of cake is in eating it. My feeling is that no matter what work we have done in pre-selling, we'll have to continue 10 times more work once that correction sets in. And I still remember in '97 when I started my career in Franklin Templeton, in many places we were thrown out. Tum mutual fund wale, bhago yahan se. And that was mainly attributable to one foreign fund. In 2000, I remember seeing, and against opposite Siddhivinayak, there were poster of fund managers who had destroyed wealth in technology fund. कि ये सबको पकड़ो. 2008, we lost about 60% of people's money. And I think all of us were in front of the customer. There was no poster put up कि ये fund manager ने 60% पैसा डुबाया. And most people appreciated कि हाँ, you have lost 60% of our money, but that's fine, you could not have predicted Lehman. And wherever we could reach, people actually gave some money. I think as long as we will be able to face our investors hand on heart that India growth story is intact and this downturn is an opportunity to invest, hopefully we will be able to sail through. Will we see a period like March, April, May, June, July 20 where some people redeem, but lot more people topped up? I hope and pray that happens. But it will require 10 times more effort from industry and regulator and people like you who can convince investors that this is phase and it will also pass away. If we rest on our laurels, like March 20 में सब समझदार थे तो अब भी समझदार रहेंगे, तो we will be doomed.
Actually, you took away my second question. That was going to be, what was your experience in 2008? Because all of us clearly felt poorer. Where was the index, sir? At that time, we used to talk Sensex only. 23,000, sir.
21.
January? No?
January, 21,000.
21,000, okay. And we came down to 6,900, March of 2009. So, how many did you lose and when did you come back?
I still remember one event in Economic Times where me, Nirmal Jain, Rakesh Junjunwala and Rhythm Desai were one part of the panel who were obviously disheartened, but yet hanging out saying that this is time to invest and यहाँ पे पैसा बनेगा. And there was one gentleman who said 8,000 का निफ्टी, 8,000 का सेंसेक्स 6,000 हो जाएगा, ये लोग सब गलत हैं. And when the meeting got over, all four of us were in one corner. No one was talking to us. And that gentleman was surrounded by everyone saying that, yeah, ये visionary, ये सब गधे हैं. And yet, next day, we were right there in front of investors repeating the same thing. Not even once, I think, any one of mutual fund guy was doubtful that this is the time to invest. And we were, saying that from 13,000 Sensex all the way up to 8,000 and 8,000 all the way back up to 15 or 20,000. So one thing I realized in 2008, that if you lose money for investor, it's fine. No one blames you as long as you can be in front of them and explain why you lost money. Connecting with investors and retaining their trust is the most important thing. If you can retain their trust, they will give you more money. But you have to work hard to get that trust.
No, I just want to know how long it took. Mr. Singh, would you remember? How much did you lose? Did you lose? I mean, did individual investor accounts reduce? How much time did, that emphatic no is very important. And how much time did you take to get back to the mojo?
I think similar story across the industry. When nobody was, and saved. Nobody was given this thing because people really lost trust in this institution itself. There were talks then people were saying, no, यहाँ तो पैसा डुबोना हो तो म्यूचुअल फंड में आ जाओ, otherwise तो you better be in the bank deposit. And those are the statements which we had to face. But as Nilesh bhai said, you have to be consistent, you have to work harder to get in more trust. And today, when see, the plethora of IPOs and all these things are coming, the work is very hard for the investment managers, because identifying the right companies who are going to be there for the next 10-20 years and communicating it to the investing community is the biggest key. Things have changed drastically, but 2008, 2009, yes, as said, when it came down back from 7,000 to 20,000, it took some longer time, much longer time to the trust to come back. That's why the growth of the industry was very muted at that point of time.
Put some things in perspective, because Nilesh bhai pointed out two incidents. One was that foreign fund which he is referring to was probably Mirae Asset.
Okay.
Because, no, I'm giving you the Mirae Asset context, because in 2008, our liquid fund went negative. So practically all foreign funds were considered terrible at that point of time. But here we are sitting with you on the cusp of 2 lakh crores, right? We'd seen that risk unfold. And then I've gone through as a sales guy, my 10 rupees tech fund going to 2 rupees. I went to Ranchi after probably 20 years of my career, because at 5 rupees NAV, the ignorant risk guy I was, stood up and said, "Ki this is available at 50% sale." We learned risk through that process. As a result, for 2 years, it is for a fund house at our stage, it is very difficult to be sitting in the market without a small cap for 2 years. For the last 2 years, if you don't have a small cap, you are not an AMC, is the reality. But because of the risks which we cannot afford anymore to be repeated, not saying that small cap is great or wrong, I'm not party to that, but our business does not give us that scope for that downside risk anymore. The point I'm making is, as players, we have matured immensely. And there are different fund houses in different stages of fund management. And Navneet and I had this debate sometimes back that, they are 30 years old in fund management infrastructure, we are 15 years old. When we become 30, they'll be 45. So that 15-year gap gives a lot of learning. The simple point I'm making, the ecosystem now is far more qualified to handle the downside, because we are extremely fearless of talking about risk. Absolutely not. All of you put us on the toes. So we will handle the downside, I think, far superior in a far more mature manner than I doubt the downside.
No, actually, I don't have any doubt in my mind at all. The very fact that stock market as an institution survives how many bear runs is an indication that people don't give up hope. You know how to handle the bear phase. It doesn't look any different when you look at it from the lens of the mutual fund investor.
Latha, on a market fall, all of us are getting more money. Maybe it will start getting a little less as is truncates.
Yeah.
But
the pace of growth of 21% perhaps plateaus to 15% or 10% for a couple of years. But it really doesn't stop. I mean, I just asked you this question to know how you handled 2008.
I think we are ready.
But
no issues.
I mean, a bear market has never scared away the institution of stock markets. I'm a little less optimistic about debt as an instrument. So let's utilize the last 5 questions to that. I mean, I have an obvious passion for the entire fixed income concept. But where is it going? It had an advantage over bank deposits, and I thought a rightful advantage. But with that snatched off, would you write off debt as an instrument?
Me and Navneet both started career as debt fund manager.
And I met you first as a reporter for that. And I hope you remember in Franklin Templeton.
Equity ka ABCD nahi aata tha. We learned the art of equity so that our career gets prolonged. The biggest debt fund managers have shorted debt. And you have also done the same thing. So that's the sad part, Latha.
No, debt isn't, I would think, real danger. It's not growing. In fact, it is degrown.
It is degrown.
It's not just fallen as a percentage of AUM. It is, aggregate has also fallen in some months. So I just want to know whether we have to write this off as an asset class, or whether now you need regulatory or government help.
So undoubtedly we need some divine help and some regulatory help.
Divine is spelled as DOVERNMENT.
Debt as a percentage of bank deposit, that mutual fund as a percentage of bank deposits have come down dramatically. And bulk of the investment of investor is towards debt, not towards equity. So I'm missing out on a very, very large part. What do we need? One, the steps taken by SEBI like corporate bond repo market, CDMDF facility, those are all steps in the right direction. But we need a level playing field. Banks today have implicit as well as explicit guarantee of government. Insurance today have advantage of tax advantage. NPS has tax advantage. Mutual fund is without any tax incentive. Second, bank deposits grow in a linear fashion, we grow in a non-linear fashion. I need to educate investors that, look, even in bank deposits, you can lose money on a mark-to-market basis. But it will take some time.
No, actually, my own thesis would be that we are sitting on a secular debt gain. The debt market is set to give like five-year gains. Because, I mean, the market has already upgraded India. Rating agencies have not. But the kind of, what the corporate fundraisers are telling you is that in global markets, you're already treated well above BBB minus. So, I mean, do you have anything to add to that, Lalit? As in selling debt, or you just give up that and only concentrate on equities?
No. So, see, I think there is a lot of role of equity markets also to play in that, right? Like if you look at retail, a lot of retail customers, they don't think from asset allocation perspective, and that's the role of education, right? If we talk more and more about asset allocation and not just, chasing returns and so on, I think debt will play a big role. I mean, of course, like there will be a lot of policy plays and all those kind of things that will happen, but I think debt is not going anywhere. Like people will, I mean, as more and more education happens, asset allocation happens, like, No,
it is a structural story according to me, at least for the next few years. But it is just that when you're explaining to an investor, YTM is more difficult than NAV. NAV is easy to explain. So I always wonder how mutual fund guys handle it when the tax advantage is not there. Thoughts on that? Clearly at this point in time, actually, at certain points in time, it's going to give even better returns than equity because there is a structural story there. But do you see a future?
Yeah. No, I'll take this question in a little different manner because I see it as a big opportunity to push the debt funds in a different manner. That's what I'm saying, in a different manner. See, what has happened in the last 5 years, 2020, what Swarup has said, and 2022, so now we have seen only one side. People have been coming and if you go to whatever we have been talking about, tier 2 or tier 4 towns, people are talking about only one. Mutual fund means equity market.
Equity.
Okay, nobody talked about the debt funds.
That's the story for the last 2 years.
And another stroke was that all the tax benefits have been taken away. Now, today is the time when to get the people back because we all are unanimous at this point. This is the time to put more money into the debt fund to get more capital gains. Now the old investors, they have started putting some money into the debt funds like for 2 years, 3 years because they feel that 1 year down the line, 2 years down the line on it, they can play duration and they can have some capital gains. But we need to take this benefit to the retail investors through hybrid mode. That is the duty, that is something which we need to work together because today the tax laws say that if there is a 35% equity and 65% debt, you still can get the benefit of a very, very preferred tax treatment. So I think we as an industry, we have to do that hard work to go to the investors, tell them, move. I'm not saying move back from equity funds because when equity is in a more volatile mode, that is the time to get into the hybrid funds like multi-asset.
Absolutely, balanced advantage.
One is it will be education. Mutual fund सही है को prove करने का this is the right opportunity for all.
I guess that MAF is trying to do that.
Yeah, MAF,
the advertisement.
This is something which is very, very important, and that again has to go in the same manner as we did mutual fund सही है. उसी तरह से हमें बोलना पड़ेगा. This asset allocation
or any
and the hybrid सही है.
Fair enough.
So hybrid is something which we need to push.
Okay. I have a rapid fire, but before that, I just want to ask one more conceptual question and then the final rapid fire. Swarup, there is a K-shaped growth in the economy because all growth is K-shaped. Whenever growth comes, those who are better able to take advantage would grow faster, whether it is the United States or India. Magnificent Seven grow faster than the rest of the market. Do you think therefore those two can be a problem? Because the number of newcomers into the economy transiting to middle class is slowing. And the people at the higher end of the curve are going to other forms. I mean, they would invest abroad, they would invest directly, they would invest in private equity. So do you think on both sides of the K, you may find some resistance?
No, on the contrary, there are numbers for everybody. I mean, as
PMS and
yeah, as we are talking about a new asset class already coming in. So as an industry, we are also developing ourselves to cater to everybody. So I don't see, finally it will be like a pyramid. Bottom of the pyramid is where the growth is, where people will come for participation. Now, the industry, we are on core active versus passive. We already put our products there. In the middle, where people will ask for expertise, we will have probably a differentiated active kind of an approach. And clearly, in these days, we have to rethink our active generation process. Nilesh talks a lot about it. And at the top, you will have these people looking at differentiated products. So that's how it progresses. It's a progression of investments. And we are following what growth economies have done. So it's great for everybody.
Yes, take your point. As long as you have economic growth, it doesn't matter if the top grew faster. But so long as the number of, for instance, again, coming back to where I began, number of taxpayers increase, you will have a number of mutual fund investors increasing. The rapid fire is, what is the pace of growth of number of investors that you see? You've grown from 1.5 crore to 5 crore in a matter of 4 years. That is what, a CAGR of about, say, 20%. What's the expectation by 2030? Is it 10 crore, 15 crore?
If I have Xerox machine to replicate Lalit, then 40%.
No ifs. Tell me what is your number in 2030.
So Latha, on a serious note, we should be aiming for more than 20. There is word of mouth publicity for us and we have to leverage
More than
it.
20% CAGR.
Latha, just 1 minute. First of all, I must compliment Bombay Chambers for changing the parameter. We were always celebrating size or AUM. The first time, and so the benchmarks are changing. If we pursue this, then we will be 30. No doubt.
So you're looking at what number? You're looking at 10 crore? You're
10
looking
times this number in the next 6-7 years.
Excellent. My God, that deserves a round of applause.
2 crores per year is my prediction. Last year when I said 25,000 SIP this December, people had laughed. We'll hit 25,000 next year. Now when I'm saying 40,000 SIP next year, people are still laughing.
10x. I mean, that's very bright for the Indian economy.
In 7 years, because we'll add 2 crores per year.
Excellent. Mr. Singh, what would be your number?
With Jan Nivesh movement, 25% CAGR. Without Jan Nivesh, 15%.
Okay. Yeah, go ahead.
Lalit
is your Jan Nivesh moment.
So since morning, like we are talking just so many numbers, and I'm feeling like how I follow so few numbers, but so I don't know, to be very honest. Like so 2030 we might have next few years, bad years or whatever. But if you look about 2050 or something, I think mutual fund is, as I said, the best product for retail investors to build wealth and so on. I think. If we kind of create a revolution of Jan-Dhan kind of something like that, I think there will be maybe let's say 10 crore, 20 crore investors. Yeah.
Okay. To take your point, a round of applause, gentlemen. I'm absolutely confident that for the foreseeable future, the mutual fund industry will grow double the rate of nominal GDP. At least that, I feel, is very much a given, because I see income tax, the PIT, personal income tax growth, is reaching 20%, even if nominal GDP is 10 to 11%. So, congratulations and all the very best.
Thank you, everyone. Panelists, we would request Ms. Pinky Mehta to give everyone a token of appreciation, ma'am.
Coming.
A round of applause for all of them. What an insightful discussion. Can we have those claps coming? Thank you.